and then exempt us from the state antitrust laws. So the short answer is lobbyists for the insurance industry went to every state in the nation and got themselves exempt from the antitrust laws.
When you said that they, can discriminate, with car insurance, I don't know if it's on others, but with the car insurance, I do know they base some of those premiums on credit.
See, California can't do that.
You can't do that.
They base it
on. Is that in 103?
Yes, part of Prop 103. They base it on your credit score. It's a form of discrimination that 103 says is just not appropriate. Actually, let me be more specific. 103 says that any criterion that an insurance company wants to use to discriminate in setting your auto insurance premium has to be reviewed and approved by the commissioner. And the commissioner has never approved credit scoring. 103 expressly prohibits one criterion, which I think happens a fair amount all over the country. If you haven't previously been insured and you go to get insurance for the first time, they surcharge you because you haven't had insurance in the past, as if you should be punished for not being able to afford it or not needing it. 103 specifically bans that. 103 also said that your rates have to be based on your driving record first rather than your zip code, which is something that is brand new, and it took us actually 19 years to get that thing through the courts and the insurance commissioner. So it only just took effect last year.
What's wrong with considering zip code?
Switch mics on you.
Sure, okay.
Freaking out on me for some reason.
No, let me just get my notes for 1 second while we're doing that. There's one thing I wanted to back to. What's wrong with zip code? Well, in the states where zip code is, where your premium is based on your zip code, basically you're paying the same rate as the next door neighbor who has a bad driving record or commutes 1,000 miles a week and you only drive to church on Sunday. So it makes no sense to rate people based on where they live. It makes much more sense to assess people's premiums based on how good a driver they are, how many years of driving experiences they had, and how many miles of driving they do each year, and that's what Prop 103 dictates. Leon, you asked. Let me go back. You asked me how insurance is unique. Why doesn't the free market work in insurance? So first, let me revise that because I think I have a list of things I'd rather go back to. Number one, in many states, like California, auto insurance is required by law, and it's also a necessity, a practical necessity. Therefore, by itself, it should be regulated to make sure that the price people have to pay is fair. Second, it is the only industry that I know of that actually allows legalized discrimination. It's called underwriting. That's the actuary's technical term for the process that allows an insurance company to say, I'm going to charge you X for this product, but I'm going to charge you 10% more, and I'm not going to sell it to at all. That's the form of legalized discrimination that is the modern insurance companies today. It's also highly complex, very difficult for the average person to understand. Insurance companies uniquely have a conflict of interest. You pay them in the expectation that if that horrible day comes, that you've had a fire or a health emergency or an auto accident, they're going to pay you that claim. They're going to pay that claim. But they make all their money from investing your premium. So they have a built-in conflict. They have an inherent incentive to hang on to your money for as long as possible and not pay your premium. Therefore, there's a conflict of interest there that has to be balanced and watchdogged by either the government or the courts. And then insurance companies also compete with other industries for money to invest. And that's caused a lot of problems because insurance companies make decisions that then end up leading to bankruptcies or higher insurance premiums because they're trying to figure out exactly how much money they can take in, and sometimes they overprice the insurance they sell, sometimes they underprice it.
When I was in my 20s and my sister was a couple years older, I had to pay more for auto insurance because men in their 20s are more likely to get in accidents. What's wrong with discriminating based on that criteria?
103 doesn't permit any discrimination based on sex. It just permits discrimination based on the number of years of driving experience, which is a way to get to what you were saying. Actually, the most recent studies show that there's really not a great deal of difference between the genders. It's really how long you've been licensed to drive and how much driving experience you've had, how much driving you do over the period of a year. So that's all what Prop 103 is about. What good policy and insurance is, what good laws and insurance should be about is protecting the consumer by making the insurance company pay attention to factors within their own control and not factors that are outside their control, like their zip code or their gender or their age. Because you can be, my mother-in-law didn't start driving until she was 40. So she wasn't, she'd only had 1 year of driving experience, but she was 40. What makes most sense? To base her premium on her age or on how many years of driving experience she's had?
Is this a problem nationwide?
It's a nightmare across the country. We're at the end of what they call the insurance crisis of the decade. There's been one just about every decade since the 1970s. Whenever the stock market is flying and Wall Street is zooming and banks are paying high interest and stocks are returning great investment returns every year, the insurance industry is happy as a clam, and all it wants to do is sell insurance as low as it can in order to collect more premiums. You know why? So they can invest it in the stock market. But when the economy goes bad or the stock market collapses as it did in 2000, 2001, insurance companies can't make their money that way, so they turn around and boost people's premiums. And if they were honest about it, that'd be fine. But they always end up blaming lawyers and lawsuits. Instead of just saying, yeah, the economy went bad, we made some mistakes, now we have to increase our premiums, they blame lawyers and lawsuits. Now, we've left that crisis of the early 2000s, but if things go wrong again, we could have another crisis in the next year and a half, because if you notice, the economy's taken a real sharp nosedive into the toilet. And when that happens, you can predict it reliably. The insurance companies will start to say, well, we've got to raise our premiums. There are too many lawsuits.
A point of illustration for what Harvey's talking about. In 2001, St. Paul, the largest med mal insurer in Iowa, pulled out of Iowa and every market in the country. They basically stopped selling medical malpractice insurance. And it turned out at that time that we learned subsequently that they had $150 million of investments in Enron stock that went really bad on them. So what he's saying is absolutely right, that med mal insurers in particular, it's not just the stock market, but they're heavily invested in the bond markets. And so when interest rates were riding high throughout the 90s, they couldn't sell policies cheap enough and fast enough, and often policies were being sold at an underwriting loss to get the premium income and invested in the bond market. When the bond market crashed at the start of this decade, they had no choice but to jack rates so they could make up the investment losses that were disappearing from their balance sheets with increased underwriting profits.
What is your organization's hopes for this legislative session?
You know, we see a little window of opportunity to move an insurance reform agenda to center stage. This is a big insurance state, obviously, and so sometimes it's hard to have these discussions. But the Health Reform Commission really took the first step by saying insurance consumers ought to have an independent office of consumer advocate to assist them. And we would like to use that as a jumping off point for the discussion. And of course, we presented a couple bills last year that you all have in your packet. They're just going nowhere. They're dying in the judiciary and the Commerce committees. And we would hope legislators would take a look at those as well. One of them gives consumers a private right of action to, if per the insurance unfair trade statutes in this state, if they're being, if their insurers are engaging in deception or fraud. And the other bill would give them more rights and remedies in our administrative system to challenge unfair rates or unfair claims practices.
Two quick questions.
Sure.
You know, I mean, in terms of this being a partisan issue, I mean, I think President Bush, State of the Union, brought needing a cat malpractice rate. I mean, it seems to be it's very fixed as a partisan issue. So, number one,